Okay, picture this. A tech company that makes practically zero money, actively despises advertisements, and refuses to monetize its users in any traditional way. Now, imagine that same exact company being bought out for a staggering $19 billion. It makes absolutely no sense, right? Well, welcome to The Explainer. Today, we're unpacking the ultimate tech paradox, the completely backward, totally fascinating story of WhatsApp. You know, there's a classic saying in the tech world that goes, if you're not paying for the product, you are the product. And honestly, nothing illustrates the hidden, behind the scenes mechanics of the free apps we use every single day quite like this quote. Think about it. We tap, we scroll, we message entirely for free. But underneath the surface, there's a massive, invisible economy at work. So, how exactly does an app with zero advertisements actually make money? How does an ad-free, practically free platform end up valued in the billions? To make sense of all this, we've got to rewind to the very beginning. Let's jump into part one, the anti-ad startup. The year is 2009. The smartphone revolution is just starting to take off, and two friends, Brian Acton and Jan Koum, have an idea for a messaging app. But WhatsApp's early business model was totally backward compared to your typical Silicon Valley startup. Their priorities were super clear. Build a genuinely great product, use absolutely zero advertising, protect user privacy at all costs, and keep expenses ridiculously minimal. I mean, these founders hated ads so much they actually left their previous jobs at Yahoo over disagreements about it. They were unbelievably frugal, too. The team ran the entire company off cheap IKEA tables and literally wore blankets in the office to save money on heating bills. They just wanted to build a pure, private messaging service. No distractions. But, of course, keeping servers running costs money, so to survive, they introduced a tiny fee, just $1 a year. And here's the funny part about that, it was rarely even enforced. If you didn't pay your dollar at the end of the year, WhatsApp usually just let you keep using the app for free anyway. It acted almost like a voluntary donation system, kind of like the world's most relaxed tip jar. So without ads and with barely any real revenue coming in, how did they even survive? That brings us to part two, funding the network effect. Because despite bare minimum profits, investors were absolutely lining up to throw millions of dollars at them. And it was all because of one critical economic concept, the network effect. This is a phenomenon where a product gains additional value as more and more people use it. Think about the very first telephone. If only one person in the world has a phone, it's completely useless. But if everyone you know has one, you absolutely have to have one too, right? Every new WhatsApp user made the app better for everyone else, which drove massive organic growth without needing a single dime spent on advertising. This dynamic fueled a brilliant, repetitive, three-step survival strategy. Step 1, refuse ads to keep the app incredibly clean, fast, and user-friendly. Step 2, gain a massive user base entirely via word of mouth, thanks to that powerful network effect we just talked about. And Step 3, attract millions from venture capitalists to fund the servers. User growth literally became their currency. Investors were more than happy to write massive checks because they knew whoever captured the global messaging market would eventually strike gold. Which leads us perfectly into part three, the $19 billion buyout. Because eventually, investors are going to want a return on all those millions. And in 2014, a massive tech titan came knocking. Mark Zuckerberg and Facebook stepped in and bought WhatsApp for $19 billion. $19 billion. To put the sheer, unbelievable scale of that purchase price into perspective, that kind of cash could fund about 20 separate space missions to Mars. It was a mind-boggling amount of money that completely shocked the entire tech industry. And this financial mismatch completely baffled the public at the time. Facebook was paying a staggering $19 billion for a company whose revenue for the prior 9 months was just $1.2 million. They were operating at a massive, gaping loss. So you have to ask yourself, why would Facebook, the undisputed king of targeted advertising, buy an app that aggressively hates ads and makes almost no money? Well, here's the secret. Facebook wasn't buying an app. They were buying the users, and more importantly, their data. At the time, Facebook wanted to ensure that absolutely no competitor could capture the massive daily attention that WhatsApp held, especially in developing nations where Facebook Messenger just wasn't nearly as popular. They weren't just buying a piece of software. They were buying an interactive, constantly updating global contact list. Now for part 4, the privacy clash. Mark Zuckerberg initially promised the WhatsApp founders that they could remain totally independent and wouldn't be pressured to monetize their users. But frankly, a massive clash of cultures was totally inevitable. It was basically oil and water. On one hand, you had the WhatsApp founders, utterly obsessed with privacy, strictly against ads, and deeply frugal. On the other hand, you had Facebook, a colossal corporate machine built on aggressive data collection, highly targeted ads, and rapid global expansion. These are two completely unresolvable opposite worldviews trying to exist under the exact same roof. And this ironic evolution unraveled pretty fast. Following the 2014 acquisition, that $1 fee was officially scrapped by 2016. Why? Because removing the fee removes all barriers, getting even more users onto the platform. And user data is worth way, way more to an advertising company than a measly dollar a year. By 2017, the tension hits an absolute breaking point. Co-founder Brian Acton quits over intense disagreements about data sharing, literally walking away from an estimated $850 million in unvested stock just to get out. Then, in an incredible twist, in 2018, he takes $50 million of his own money to start Signal, a nonprofit, highly secure messaging app, built to rival the very monster he helped create. Talk about putting your money where your mouth is. So let's look at part 5, how WhatsApp makes money now. With the founders gone and the $1 fee completely dead, how does this tech giant actually extract value today? Well, while WhatsApp messages themselves are end-to-end encrypted, meaning they aren't actually reading your private texts, the sheer volume of metadata they collect around those messages is staggering. We're talking about your phone number, your login activity, your contact lists, your IP addresses, your device locations, and even financial information. This vast net of data collection is actually what sparked a massive public backlash during a mandatory privacy policy update back in 2021. And this right here is their real modern business model. It's all about bridging the offline and online worlds to build a perfect advertising profile. By connecting your phone number, which is essentially your permanent digital ID card, with your internet habits across other platforms, they can build an incredibly clear picture of exactly who you are and what you like. The messaging app itself remains entirely free because your behavioral data helps them sell highly targeted things to you absolutely everywhere else on the internet. Which brings us to our final section, Part 6, the ultimate trade-off. It's really important to view this objectively. This isn't necessarily some dark, shadowy conspiracy. This is simply the standard, everyday exchange of services for data that powers the entire modern internet era. But it does leave all of us facing a really tough choice. You can opt for maximum security by switching to open source, nonprofit apps like Signal that don't harvest your data, but doing so almost always means sacrificing maximum convenience. Because of that network effect we talked about earlier, leaving WhatsApp usually means leaving behind your family group chats, your friends, and maybe even your work communications. So we are ultimately left with a pretty provocative question. What are you willing to give up for the ultimate convenience? We all make this choice every single day. We trade a slice of our privacy, a bit of our personal data, just to easily stay connected with the people we care about.